Hello, guys. Welcome to my channel. And I hope you guys are all having a fantastic day. Um, but don't let these markets affect you. Today was definitely one of the worst days that I have ever seen the markets react to something. And I mean, this is absolutely just insane. I've never seen anything like this. I was following the stock market since 2008, since I was 13 years old, 12, 13 years old. And I've never seen a single biggest percentage drop of NASDAQ. Maybe one time in 2008 December, that was pretty big. In terms of points wise, it was huge. Percentage wise, it was pretty crazy, like some 10% or 9% or something like that. And then again in 2020 March, when COVID lockdowns was going down, and that's when like I saw the market just tumbled the day after the tumbling. And then I even remember that they had to shut down the stock market trading for a few minutes just because the volumes were so high. And today is one of those days where you see the markets just react uh, pretty crazily. And I don't blame the investors, just the way that the investors reacted today. The reason is, once you start the tariffs, like how Trump did yesterday, um, I mean, they're a big deal. Okay, this is what is considered the worst of the worst case scenarios possible that Trump was going to reveal. And people were mostly thinking that, okay, so what Trump was going to do is he was going to put some tariffs on all these countries that have tariffs on United States goods. But then they were not thinking he's going to basically go from like, okay, if they're going to do 50%, we're going to do 25%. No, 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 no. That's not what Wall Street was anticipating, and that's not what big investors are anticipating. They were more anticipating of it's going to be like a 10% tariffs on all countries, and then if it's going to be painful and hurtful, then you're going to come forward and make a deal. No, no, that's not what Trump did. Trump went out full on, be like, hey, listen up. This is what it's going to be. Okay. You put tariffs on us. We're going to do a tariff on you too, but we're going to do it at a discounted rate, not really a discounted rate. That's going to be painful for these countries. And that's okay. I mean, it's nothing that was not expected. Trump was saying that he was going to deal with tariffs since the day one of the campaign. And he's doing it. He talked about immigration. He said, I'm going to kick out all the illegal immigrants out. He's doing it. I'm going to put all the tariffs on all these countries that have been hurting United States. There you go. It doesn't really surprise me as much. And honestly speaking, what I was expecting like when he said reciprocal tariffs, I was expecting that he's going to slam the same amount percentage tariffs that the countries are charging for United States goods. So I mean, he went half off in terms of what they're charging. So the actual number that the estimated tariff rate against United States with currency manipulation that Trump stated, I think this is definitely like much lower percentage. So overall, the reciprocal tariff is stated to be the half of what they're overall charging the U.S. goods, which in part fairness, I think what Trump did was basically, hey, here it is. This is what it's going to be. You want to talk? Come talk. We'll talk. Let's do all the talking, and let's figure this out. But if you're gonna be that, I'm just gonna put 10% on everybody and then come talk, all these countries, they're gonna be like, all right, it's 10%. You know, what we'll do is all the American companies that are actually coming in and buying stuff from us, then we'll just give a little bit of a discount. The manufacturers are going to take a little bit of a hit. The distributors are going to take a little bit of hit, and then the consumers are going to take a little hit, right? So divide. No, 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 no. Trump is like, I'm going to put these tariffs and you come and we'll make a productive deal where America is going to benefit. And that's what Trump did. And he's going to stand on it. And I think that's how if you're going to make a deal, that's how you're going to, you should stand up to it like that and bring those companies to America and build the manufacturing units and all of those units, whatever that Trump wants to make those deals come forward. Okay. And next up that I want to talk about is the stocks that really got hit today. Okay, the stocks just majorly got hit today are retail businesses that have the highest amount of product from China. Okay, well, you saw this chart right here. China charges United States 67%. Fine. But US is going to charge them 34% reciprocal tariff rate. I mean, that means that every dollar product that's going to come out of China, you're going to be paying $1.34. Okay. So if Nike says, okay, I'm gonna get these shoes manufactured in China for $100, and then they're going to bring it to United States, it's $134. So you're going to pay 34%. Not necessarily the consumer, but somebody's got to pay this price. Somebody does. So whether it's going to take a hit on the company's profits, whether it's going to take the hit on the manufacturer in China, or whether it's going to take the hit on the consumer, right? So we've got to really see who's really going to take that hit, or is it just going to be divided up into three ways and then everybody takes a hit like 10%. I don't think that all of these countries are just going to sit back and let these tariffs just go into play. Just because if you look at it, I mean, it's billions of dollars worth of goods, and no company is willing to lose that much money, and neither do these countries. So these companies, especially these United States companies, they're going to put a lot of pressure on the manufacturers. They're going to go to China and they're going to be like, hey, listen up. I'm not going to be able to buy the product, okay? It's going to be 34% more expense for me. They're going to turn into a couple ways around. Either they're going to convince the manufacturer to lower the rate, okay? Which is more likely to happen for some long-term loyal manufacturers to just these one specific companies that they're dealing with for over 30, 40 years. Just to overcome this short-term barrier. Or they're going to be like, you know what? Why don't we just go and buy some robots, buy the material from China, and that's okay. I think some of those things are raw materials are exempt to a certain level, and build the shoes here in America. Let's do it. Let's do it. It's gonna cost us anyways about 40% or 30% tariffs. It's gonna cost us maybe like 20% more to manufacture it in America. Let's do it. See, that's the type of thinking. I'm not necessarily saying it's gonna cost 20% only in America. I would say it probably costs a lot more to make a shoe in America than it would in China. So it's the companies, how they're gonna have to deal with these short-term barriers. The first stock that really got affected is Academy Sports and Outdoors. This is a company that sells all the sporting goods like shoes, water bottles, clothes, like guns, and you name it. So the hunting stuff. So these guys, they obviously took a hit. Why? Retail industry, most of the products made in China. Next, Dick's Sporting Goods. Man, these guys took a hit today. 12% down. Again, same sort of story as Academy. Deckers, these guys make the Hoka shoes, okay? They were very, very popular. They were super popular. Look at that, highest 230, 220 at one point, and then down to $100. So they were obviously getting wrecked. So people knew about this. People knew on this day, like, oh, Trump tariffs are coming up, and they had phenomenal quarterly results. I'll tell you that. Boom, stock went down 20% the next day. It's down 50% in less than a month, in 2 months. 20%, 50%. So you see these type of companies, I've used Hoka shoes, and honestly speaking, they were really good in the beginning, first 1-2 months, and they started wearing out pretty fast. 3 months, they're like already wearing out. I use Nike products, Nike shoes. I kid you not, I have Nike basketball shoes that I bought in 2018, and I still have them, and they're doing great. So there's a quality in product that consumers are going to notice, and they're going to pay the higher price. It's not going to be like, oh, these shoes are comfortable, everybody's wearing it, all the people that I see on day-to-day basis, but that's not how it's going to work out. Consumers know what product is better. Consumers are going to go towards that product. Next up is Revolve Group. These guys took a hit. So this is a company that basically it's like an online retail. You can buy products like shoes, clothing, designer clothes for a little bit of a cheaper price. Obviously, they're mostly from China. And then you guys got to see this one. Restoration Hardware, I believe. RH back in the day, and then they rechanged it to just RH. 40%, guys. $100 down, 40%. So this company, like not too long ago, in 2021, it was $700, but then they screwed up. They screwed up big time. When the company was doing good, these guys are like, you know what? Let's buy back all these shares up, and then let's increase our EPS. Failed miserably. They took debt to buy these shares, and it's obviously never a good idea. You don't screw around with that type of stuff. And the CEO did, and the stock's at 149. Balance sheet looks crap. It's hard to turn it around, but let me tell you, if they do turn it around, oh yeah, it's hard, but they have to turn it around. And if you look at what's happening in the market today, there's one very, very interesting thing that happens. Number one is, you might ask, okay, Trump is putting all these tariffs on, but why are all of these software companies getting hit? Why? MongoDB, 10%, Symbiotic, 17%, Sentinel-1, 5%. You come down more here, you got the Inuit software, 3.6%. You got Workday, 3%, ServiceNow, 6%, CrowdStrike, 6.5%, Cloudflare, 10%, Snowflake, 10%. So you might be wondering, why are all of these software stocks that are getting really hit today? Well, the main reason for these software stocks and these IT stocks, these non-retail stocks are also getting hit is, number one, is just the overall market sentiment. Number two is recession fears. People, investors, and Wall Street is actively thinking that Trump just put us into recession with these tariffs. And so the recession fears are going to, if there are fears of recession, it's going to affect every single company, no matter what. It's going to affect Apple. It's going to affect Meta. It's going to affect Amazon. It's going to affect Snowflake. It's going to affect MongoDB. It's going to affect Palantir. It's going to affect every single company. It's a chain of events. And so if you start laying off people, they're going to be not buying as much Nike shoes anymore. Nike is not going to make so much profits. They're going to start laying people off. And then it's just a chain from one company to the other company to the other company to the other company. And then you get a crash and you get a recession and everything has to reset. Interest rates have to go like extremely low, and financing is gonna rise, and then reinvesting into the companies, and then it's a whole cycle. It's a whole cycle. Okay, and it's gonna happen again and again and again and again. All right. And next up that I want to also show is like was there really a recession hint in the market, or like the way that the market was going today? Absolutely. Why? Look at McDonald's stock today. Look at it. Look at the $5 meals. The $5 meal McDonald's is up today 2%, because people know that, okay, recession's coming. People are not going to have so much money to go buy these $100 worth of groceries every 4 or 5 days. They don't have money to go spend on their factor meals. They don't have money to go order Uber Eats. But do they have money to go get a meal, a drink, 4 nuggets, a sandwich, and French fries for $5? McDonald's. There you go. This is what happens, You get the entire market down. Oh, is it a recession fear, or is it just, no, it's a recession fear. McDonald's is up. You know what I bet? The another stock that probably wasn't as affected today. Yeah, there you go. Domino's Pizza, only 1%. You see Nasdaq down almost 6%. S&P down 5%. Dow Jones down 4%. Domino's Pizza 1%. Why? Because I just bought Domino's Pizza today. That's why. It's cheap delivery. You get a pizza for $7. 2 pizzas for $7. Delivery fee of $4. You tip them like $5. Everything's under 30. Family of 4 can eat. That's what I'm talking about. People are going to go towards these type of stocks, and that's what Warren Buffett was buying this. Now the smartest man in the entire world is probably, people are looking at Warren Buffett and be like, oh man, this guy saved a lot of money. This guy had so much cash. So, but anyways, the stocks that I want to really buy going forward is most likely in the next week or so, most likely next Friday, not tomorrow, but the week after, just to kind of let everything settle down. Is I'll come back to Elf and Nike because I already talked about them. I own those stocks, but the new stocks that I do want to buy is PayPal Holdings. Now, is tariffs going to affect? Probably not. But is recession going to affect? Yes. But at this PE ratio, at this forward PE of 13, it's extremely cheap. It's extremely cheap, and I think it's a great price to enter. Okay, so I really have this on my mind. I mean, PayPal less than $70. It's a buy. It's a steal deal. Next up on the list is Adobe. The reason why Adobe is really like my favorite right now is because of their recession, partly a recession proof, but mostly a tariff proof 100%. It's not going to be affected by tariffs. And if a recession does come, if a creator is dependent on photo editing or video editing or content creator, they're not going to get rid of their $20 Adobe subscription and find something else. They're not going to do that. So Adobe is quite resilient in a lot of ways. I've been recently noticing, and the more research I do, the more I'm intrigued into this company. So the PE of 18.9. Tell me one time in history that Adobe's PE ratio was 18.9. One time, tell me, with this growth rate. I don't think so. I mean, their profit margin is 30%. So I don't think I've ever seen it. If you guys see it, please let me know down in the comments. But next on the list is definitely PayPal and Adobe. The other stocks I'm still looking at, especially like these they look really attractive to buy, but at the same time, like Meta is a good buy. I mean, Meta is 531 is a really good buy. I'll tell you that. Next is Amazon. People are saying Amazon might not be affected because it's just a platform where they make a whole bunch of revenue, and then most of it goes to like whoever is selling the products on Amazon. But if these sellers are going to be affected, Amazon's going to be affected. If the prices of the products coming from China are going to be higher, if the sellers can't sell these products because consumers are like, oh my God, no, the price is too high, Amazon is going to be affected. So there is a fear of inflation. There is a fear of consumers just like retaliating to the high prices. So Amazon is going to be affected in that way. Caterpillar 100% is going to be affected. Manufacturing in China, or like, bringing in stuff from China, they're going to be affected. And overall, Caterpillar resonates the housing market, the new housing construction, commercial construction. So nobody wants to build right now. If you look at these D.R. Horton, Toll Brothers, go to Pulte Homes in Northeast Florida and look at their discounts. I'll just show you guys right now. No kidding. Okay, you check this out. Let's see quick move-ins. Okay, look at this, guys. Like they're 40 grand down. You got 20, like their price cuts in every single spot. Look at this one. $800,000 house, now $650. $400,000, $350. 460,000, 400. 531 to 5. This is 80 grand down. Like, so you see all these homes like 60,000, 81. I have not seen this last year, guys. When me and my wife were planning on buying a house, I didn't see these discounts. I was going to pay this type of price, but I didn't. The interest rate was too high. I was not able to afford this monthly payment. I rented. I'm okay with it. I don't have kids right now. I don't need a 3-bedroom, 4-bedroom house. I have a 2-bedroom, nice place, nice community. My wife is happy. I'm happy. Now, when there's a recession fears, or when the market's crashing, inflation risks are pretty high because who's going to pay all that tariffs? Now is the time when Fed's going to come into play, and hopefully they cut these interest rates because they're just way too damn high. Okay. Next thing I want to talk about is, usually whenever you see this stocks down so much, you see the 10-year bond rate going up, right? But that's not the case today. Everything kind of crashed except for gold. So when this 10-year note goes down, I'll bet you mortgage rates are going to come down. When this 10-year rate goes down, mortgage rates are going to go down. And you've seen it happen again and again and again. What was the interest rate if you were to buy a house in 2020? You'd be paying about 2% for a 30-year fixed, or 2.5%. What's the interest rate now? 6%. 5.75 if you're lucky. So that's the thing. This needs to come down. This 10-year note needs to come down. It's almost taking that 3% mark. So I wouldn't be surprised tomorrow morning you wake up, this is 3.9, 3.95. But it has to come down. If you want the mortgage rates to come down, this has to come down. So couple of stocks other than the new ones that we just talked about, PayPal and Adobe. I do want to buy a little bit more of Elf. Elf at this price is just beauty, absolute beauty price. Next is AMD, 93. I don't think I've seen AMD at 93 in a long time. Long time. 5 years, 3 years. 2023. That was the first time. It was 2023 May. So good deal. It's a good deal. Next is, I want to talk about Nike. Nike got hit today. Nike shoes. Nike got hit. Am I too worried about Nike stock? Nah. They're gonna make it back. I'll probably buy more of Nike. It's a good company. It's in good hands. I'm not too worried. Portfolio update I'll give you guys right now. God damn. 11% down, $4,000, and I did not sell a single share, nor did I buy a single share. Probably should have bought some shares, but I just want to let the dust settle down a little bit, okay? Because when I'm buying something, I like to feel comfortable buying it. I don't like to feel that should I buy it maybe tomorrow? No, I feel comfortable when I'm putting my money in the share, buying the stock. Even if it goes 50% down, I'm okay with it. But I just want to feel comfortable when I'm putting my money in, okay? And some other potential buys that I want to talk about is if Caterpillar goes below 275, definitely. But PayPal, Adobe, I was waiting for below 375. I think it's a good price to enter, and it is now. So you guys can see me anytime buying PayPal or Adobe. Once I buy it, I'll make sure to put that on the day of on the day of purchase. And then Amazon is a good buy. It's just that I don't mind buying Amazon at 178. It's a cheap price. But it's just that Amazon is not the company that's going to go like 3x right in the next 3-4 years. I think it'll double in the next like 4 years, but I don't personally believe it's going to grow. It's going to go to like 280 by end of this year, or like mid next year. So that's there. Lululemon, my favorite brand, but never bought a single thing from it. Maybe like a long time ago, like 10 years ago, I might have bought their Lululemon workout pants. Good price. I would love to see this under 200. Shopify, buy. Apple, same thing, just what I just talked about. Amazon, if Apple was to double up like in next year, the company's valuation would be $6 trillion. I just don't think that's something likely. I mean, they have to really double their profits. So the growth of Apple was there at 8-9 years ago. If you put your money then, but that's kind of it for Apple. Man, Microsoft didn't get hit at all today. Only 2.3% down. That's good. That's very impressive. Tesla is impressive. Only 5.5%. How much? Palantir, that is impressive too. Oracle got hit. I don't know why. Oracle got hit pretty hard. Again, it's both the recession plus the tariff fear. So it's just a combination of all together. All right, guys. Last thing I want to talk about is this article right here. All of these tariff stuff, they're gonna come, they're gonna go. Nothing is permanent, and markets are gonna go back up. Period. That's the past 170 years of stock market. That's exactly what happened. Governments come, governments go. Leaders come, leaders go. Tariffs come, tariffs go. Markets are down, markets are gonna go up. So, coming to this article, Trump open to phenomenal offers on tariffs, claims rollout going very well. President Trump on Thursday downplayed the market reaction to his tariff moves, claiming the rollout was going very well, while hinting he was open to phenomenal offers from countries to reduce eye-popping rates set to go into effect next week. Okay. The tariffs give us great power to negotiate, right? Negotiate. Trump said, adding that every country has called us. Asked if that meant he was considering relenting. Trump said it depends. If somebody said that we're going to give you something that's so phenomenal, as long as they're giving us something that's good. As our stock market live blog cover, blah, blah, blah. And then Trump also suggested the market would soon boom. The markets are going to boom. The stock is going to boom. The country is going to boom. He said in response to reporters' question. Okay. So if you see this article, it's like, is Trump just playing a game? Or is this just, are the tariffs permanent? Personally, I don't think the tariffs are permanent. I think Trump is just strong on his stance. He's not moving. If those countries don't come in and be on their knees, I guess it is what it is. But if those countries starts coming in and they're going to start making deals with Trump, these tariffs might just like go away. So I think that those countries, they're obviously, you wouldn't want 65% tariff on an American product coming into that country. That's just going to be brutal. So overall, I think that's kind of it for today, guys. If there's anything else, I'll talk about it tomorrow. If you guys have any suggestions, if you like this video, please hit that like button and make sure to watch my other videos. I do spend a lot of time creating those videos and the content in it. So thank you so much. Hit that like button and please subscribe. Thank you.